Welcome, everyone. In this presentation, we'll explore the dynamic landscape of Indonesia's banking sector by diving into the performance and prospects of four key players: BMRI, BBRI, BBCA, and BBNI. Let's get started on this financial journey. Before we dive into the details, let's take a high-level look at what's coming up. The Indonesian banking sector is growing, but not all banks are expanding at the same pace. Some are playing it aggressively, while others are taking a more cautious approach. We'll see who's leading the way and why. When it comes to funding, deposits are the backbone of every bank, but not all deposits are created equal. Some banks enjoy a strong funding advantage, while others are facing challenges. We'll explore how this impacts their profitability. Now, here's the big question. More profit means more risk, or does it? Some banks are making high margins, but that comes with a trade-off. We'll break down who's balancing profitability with stability. And finally, where's the smart money going? Some banks trade at a premium, while others might be undervalued opportunities. We'll see how the market values these banks and whether those valuations are justified. With that in mind, let's take a closer look at how these banks are growing, starting with their loan and financing strategies. Let's begin by examining the heart of banking: lending. This slide shows us how each bank's loan portfolio has grown between 2023 and 2024. Notice BMRI's impressive jump and the different levels of impairment allowances that hint at credit quality. Essentially, while loan volumes are growing, the nuance in quality is a key driver of future performance. Next, we look at how these banks fund their operations. Our visuals break down the composition of third-party funds. Notice the emphasis on low-cost deposits, especially in BBCA, which boasts a strong CASA ratio. This mix not only underpins liquidity, but also offers insights into each bank's funding strategy and risk resilience. Profitability is the lifeblood of any bank, and here we see the variations in income performance. BMRI and BBRI lead in interest income, yet you'll note subtle shifts in their margins. Meanwhile, BBCA's premium performance is clearly reflected in its strong net interest margins. These numbers not only tell us about revenue generation, but also signal the efficiency of each bank's operations. Shifting our focus to the balance sheet, this slide spotlights asset quality and risk management. BMRI's large asset base, BBCA's robust capital ratios, and the varied lending aggressiveness, captured by LDR and NPL figures, paint a detailed picture of each bank's financial health. It's a balancing act between growth ambitions and prudent risk-taking. Market valuation is where perception meets performance. In this slide, we compare the PE ratio and PBV multiples across our four banks. BBCA's higher multiples underscore its premium market status, while BBNI's notably low figures could indicate a hidden value opportunity, though with a note of caution due to its modest profitability. It's all about understanding what the market is willing to pay for future potential. As a side note, the last prices used for calculating the PE ratio and PBV were those of February 17, 2025. Looking ahead, each bank has its own story to tell. BMRI continues to dominate in loan growth. BBRI shines with robust income, but must watch its credit risks. BBCA remains the epitome of stability, and BBNI, with its attractive valuation, might just be the dark horse for value investors. These insights provide a nuanced framework for considering your next move in this vibrant sector. To sum up, our analysis reveals a well-rounded Indonesian banking sector where growth, risk, and market sentiment intersect in fascinating ways. Each bank, BMRI, BBRI, BBCA, and BBNI, presents unique opportunities and challenges. Thank you for your attention, and remember, in finance, understanding the story behind the numbers is key to making informed decisions. If you have any questions, please write them in the comment section and we'd be happy to address them.